Morning, morning, morning. What's up, Daffy? What's up, Green? What's up, Evis, Mel, Purple Mango, Frank, Jordan, two different Jordans. Good morning, Divert. Good morning, Gary, Sheriff, Braden, Steve, Rob. Good morning, good morning. What's up, Sinful? Alright, so I already took the liberty of adding the previous day high, previous day low, previous day close. I left the open there just because it's in between a bunch of levels anyway, so it doesn't really help anything. To the downside, though, we could easily look under 404.40s. This would be a good kind of early level, but in all honesty, if you want to wait for a more passive, slower level, I would wait for 404. So these are going to be our two break belows short term. I would say the pre-market low, but it's just so close, it doesn't even matter to me right now. So I'd say you're really relying on previous day close, previous day low. To the upside, you're really relying on a break of the pre-market high at 405.75. So we have a pretty good distance before that one already. But overall, we're going to get some really choppy moves the first probably hour of the day, hour and a half, I'd bet. So be very careful. Don't just start randomly taking trades on different charts. I'd be very careful with what I trade today. And how much, too. It's not just what are you trading, it's how much are you risking in each trade. I would be looking to risk very light, if at all, in any of your trades. Good morning, Jake, Brandon, Andrew, Ben, Daniel. Good morning, good morning. So above 405.75. So above 405.75 towards 406.40, 406.60 range. Above that area towards 407.50. Below 404.40 to 404 area for downside towards 403.50 slash. I'm gonna remove these drawings now. Slash 402 400.60. And there we go. We have our SPY levels. Looks a little cramped, but it all makes sense. Essentially looking for this area to break. We can color code it if we need to. Need both of these levels to break, not just one. And then we can color that green. Everything in between is just a median, a kind of in-between area to look at. Nothing crazy. Bigger time frame. We always talk about smaller and bigger time frame. Bigger time frame. We are up against a very important area. Pretty much filled this gap. Looks like they wanted to try and start filling that gap even. Down from 408.25 down to about 407.25. So about $1 range. Nothing crazy. But it looked like they wanted to go touch that. So keep in mind of that gap as well on the bigger time frame down to the smaller time frame. But right now we are rejecting 405. We're actually at 404.50s. We're kind of chilling right where we close. So in reality, we're kind of focusing to see, are we going to break under previous day close and are we going to break under the 2 day ago close and the today's lows, if that's possible. Again, us pushing through both of these areas here. They were at least headed to at least middle point of this candlestick in my opinion. So I would mark up a median here, a fib, and just kind of mark what is the halfway level. It's that level right there. I would say this is at least where we're headed. If we do break to the downside, I would say 401.95 is at least where we are headed. If we do break, again, this day's close and then our previous day lows, I do believe this is where we are headed at 402, maybe even 400 for like a wick down and then a pull back up on the body. If we get a break over 405, we need to look at 407 and possibly see the fill of that gap going into 409. So there's a couple different scenarios that can happen here today on SPY. But I like the possibility of both even happening with the volatility that we're getting into the market today and tomorrow. We definitely could see both sides get toe touched really quick. But that's what I would look at to happen today. Give me a thumbs up or a yeah if you guys understand what's going on in the bigger or the smaller time frame. We talked about the smaller time frame first today, just kind of broke down the levels, what we want to see above, below, for bears or bulls, and then we talked about the bigger time frame, just kind of discussing what we think is going to happen, as well as the different scenarios for both sides. You guys always see me cover both bulls and bears because there is no point in talking about just one. Plus, it's just good practice. It's a good way to kind of get that emotion out of your head, because a lot of times people deal with emotions too. It's not just because of like them handling them or not. A lot of people deal with hard emotions when they trade too because they think more biased. They think, oh, well, I was thinking downside. It's like, well, there you go. There's half of your problem right there. You're starting yourself off on a bias. That's not good. If I start off a trade being bearish, well, I've now cut my scenario of success in half by 50% because I've cut off 50% of the scenario in real life, of reality, of what's going on. So don't do that. Don't put yourself in a bias format before the trade even starts. Good morning, good morning. All right, so we got SPY. Everybody seems to get it who we answered, so we're moving on. Apple. King of the market, weighs the heaviest. Anytime this MF moves, we feel it in SPY. There's our previous day high. So above this area, that looks pretty good. Above this area, that looks pretty good. Previous day open is basically where previous day close is. We'll go ahead and mark both previous day open and low. All right, we didn't even have to do that. All right, so it's good to note. Whoops. So like right here, that's too many levels for me to mark, right? So I'm just going to cheat, and I'm just going to grab a zone here. We're going to go from previous day open, which also covers the previous day low, and we're going to drag it all the way down to 153.15. So now if we see a break of this entire area, then we can look for downside, right? But if we get a hold of this area, we can still look for good potential bounces, right? So we'll look for that. If they just initially push over, I want to see them push 154.60 again. So we'll mark Apple on our list today. But I do like that a lot on both sides. Above 154.60s. Whoops, 60s. Target 155.50. 156.30. We'll just say 157. Below 153s. We'll just say 153s. 153 10s. Target 152.15. 151.15. 150.15. There we go. All right, there we go. We got Apple done. And we deleted those amazing drawings. Let's go to Amazon. All right, so Amazon's starting off a little. Wait, where am I at? Yeah, Amazon's starting off a little lower. Actually, no, I guess in relation to their previous day close, they're in pretty much the same spot. Apple's a little lower now. SPY is just above. They touched their previous day close. So we're using our previous day close to kind of determine how far is everything off. Amazon seems to be a little higher actually. So it looks like under 93.70s we can look for more downside. Above 94.30s we can look for upside. Alright, so we'll come back to that. We'll see if we like that one still a lot. Tesla, we need to watch 191 pretty much. Just flat. 191, 190. And if those break, then we're probably going down to 188. If that breaks, we're probably going down to 185. If you see a push above the previous day close, though, 193.83, pretty much just 194, that'll be a good area for a push. Even though the pre-market high is a little bit higher, the previous day close being there is a very, very strong indication of a potential breakout to the upside. So 194, 190 is kind of the range for Tesla, even with all their other levels being over here. Meta, ooh, they have a very nice pre-market. Nice, nice. So I would say this is kind of their last line of defense. 190 or 189.50 honestly seems to be a really tough area for Meta. They got up here one time, they got up here a second time, they did never see that again, and then here we are this morning in pre-market when everything else is down or sideways. Meta is up, and they are up against this 190 again. So I'd say 190 honestly needs to be your breakout to the upside on this one. To the downside, I'd honestly wait for this 186.80 just because you do have such a large pre-market, so that's your pre-market low covered, as well as your bigger time frame level down here. Previous day close is way down here. Previous day opens way up here. So you could even take an early entry at previous day open if you wanted. That one's not bad though. Microsoft, here's previous day open, previous day close, previous day high. Alright, so this one's not bad. You could look under essentially 255.80s, 256.40s area. Under everything. To the upside, you could definitely look at. I also like how it lines up with the previous day's price action, where it kind of broke out here, sat, reset, pushed up higher, and then right here you have like this wall of resistance. I kind of like that the pre-market high lines up with that, so that could essentially be your break above 258.50. So that's not a bad find. We could do Microsoft, Google, previous day open. Bigger time frame level 94.70. That could be a good short-term entry to the downside. To the upside, I'd probably just wait on 95.55 now that it's broken the previous day close. But this could also bring some buying pressure essentially up to that level. AMD, previous day low is definitely going to be the line of defense there. Yeah, it looks like above. Here's pre-market high. Above 81.65 or below 81 is essentially AMD's initial range. To the downside on Nvidia, 234.85. We also got pre-market high. Netflix had a crazy day yesterday. They were like one of the strongest ones in the comm sector. And then second half of the day, it was like, what am I looking at? That was a crazy, crazy move yesterday. Netflix isn't that bad either. They have a pretty tight range, and then that crazy amount of movement yesterday gives them a wider range on their smaller time frames. All right, so let's go back through these. Amazon, we talked about this. We like it above 94.35. We like it below pretty much 93.50s. I would probably just wait for that. Tesla, I like it below 190 essentially, or above 194. Those both look good. Meta really needs to just kind of chill out a little bit, get some consolidation going after this crazy move to the upside. This is probably from them cutting more people from their workforce, if I had to check without checking. Yeah, more layoffs as soon as this week. And probably dismissing a... Okay, that's not bad. But they need to look over 190s essentially, or under 186.80s. Microsoft, we need to see under 255.85 or above 258.50. Google, for bulls, we need to see above 95.55. For bears, we need to see below 94.70. That's just essential. That's just the initial range. It's not, oh, that's set stone for a week from now. No, that's just for now. It's just for today. For short term, AMD looking to possibly break 81. A good possible flat level there towards 80 or above 81.65. Nvidia, we have above 236.85 or below 234.85. And then Netflix, which I kind of like this range, we have below 312, or you could just wait for 310. But both of those really good break below. So I think I'm going to go back through those and I'm going to add a couple. But good morning, everybody. Glad to have you all in here. Sorry, just kind of been focused on this. But let me know, what are y'all's favorites from this? We went through 3, 6, 9, 10 stocks, I guess you could say. All right, I'm going to type Netflix just so I have it ready. I'll see what y'all say after that. 314 target. Bolden Apple, Bolden Netflix. Good morning, good morning. Meta, good morning, good morning. Hey, glad to have you back, E. Hopefully you were safe on your work trip. Isaiah says Tesla. Jazz says Meta. A couple you said Apple. Yeah, Meta will probably move a lot more. I always avoid it after it does stuff like this, and then it moves like double that in the open market. So yeah, let's maybe add Meta. I'm gonna say 189.50 to 190 range. I was gonna say I don't think I have this chart complete. Probably say every dollar, to be honest. Below 186.80s towards 185.85 and 184.70. And then, of course, outside of these levels, you can look for more downside. Outside of these levels, you can look for more upside. It's just kind of a good range to give yourself. Meta, Bolden. I kind of liked Microsoft a lot, too. I'm not going to lie. I always hate on Microsoft, but I actually kind of liked how they look today. 258.50s towards... Probably going to be passive with this and say 259.30. We'll just say 259.25. 260. 260.75. And then, of course, above 260.75, you can look for more upside. Below 255.80s towards 255 and then 254.20. Let's see if we can fit one more in there. Big Lou, Isaiah both said Tesla. Spy below previous day close. Just kidding. Yeah, don't joke. It is fighting under previous day close. You're not. I wouldn't JK that. They are below previous day close. Now they're working towards previous day low. All right, so let's see if we can fit AMD or Nvidia on here. Probably say Nvidia. And I'm gonna be very short typing with it because we can't fit that much room on this information on this notepad. Below 234. There we go. Perfectly. Oh, I can't do a period. All right, there we go. Bolden. All right, let me send this out to everybody. You guys should be all good to go, though. Give me a thumbs up or a yeah or whatever to show me confirmation you do understand some of the information that we talked about in the pre-market prep. Again, covering 10 different stocks, looking at good potential breakout levels for up and downside. We can also go over sectors here in a second. I'm just making sure I send this out to everybody. Let me get a screenshot of SPY as well. Awesome, awesome. Yes, sir. It was nice to visit Hawaii and Maui to talk with clients and meet some of work team, but now back in Texas, at least not scorching hot. Yeah, it's not. It's not yet. Not yet. You are right to say that. Glad to have you back, though, E. Glad you're safe. Apple 150 soon. Yellow iPhone is garbage. It's a lot to take in, but the way you break it down is amazing. Thank you, Lucid. Appreciate you. All right, looks like everybody understands what we're looking out for. Good, good, good. There's also others we could look at too, like Square. Looks like Square, as long as they hold that, they look okay. But they need to break above this, essentially. Oh. They need to break above that. BAC broke lower. Boeing's trying to hold under previous day close. IWM's trying to hold above previous day close. That's small caps. BABA. Previous day close is kind of important to them right now. Meet a previous day lows right there at 88.50s. So you got about $1 play there if you want to play that under previous day close. Previous day. Honestly, it sucks because their lows are down here, but they do have kind of closer outside lows from their previous day close that could be used. So I'd really say under that level to that level. And then to the upside, probably above pre-market high. Look towards the meat of this base here as well as the meat of the high. Coin, they're down on a support, but they really haven't moved much, so that's pretty nice. I'd wait above their previous day open or under their previous day lows, which is pretty much what that level is. That one will be kind of sketch. Alright, so let's go through some sectors. We do have a pretty good resistance here on tech as they got really close to 144s. They're kind of up where they've been rejecting in the past where this consolidation is. So they had a pretty good rally and they're rejecting currently. That's normally a very bearish candle, so be very careful going into this, which this candle is pretty much just calling for a retest of 139.70. So we'll see if that happens today, if they get another green candle in between. But overall, we'll see what happens or what invalidates. What invalidates this could be a push over the previous day open right here. This is where the candle opened right here. They went up, they came back down, they finished lower, and that's where they closed. So an invalidation would be a push over both of these, the meat of that candle there. And that's, again, your Apple and your Microsoft sector, the heaviest sector in the market. Healthcare also had a good pop. It looks like they're kind of in a sense holding, though. As long as they're above their daily 9 EMA, they look okay. It looks like discretionary. This is your Amazon, Tesla sector. They have pulled back a little bit, as you guys can see. They are opening a little bit lower, but what's important is that if you go from their previous day open to their... well, hold up. Previous day open to previous day close. They did technically break under their control point, but not the golden pocket. So they're looking to break that golden pocket to probably bring price down a lot more towards 144.50. So I'd be looking out for discretionary to possibly pull back. If Amazon and Tesla do not pull back, they hold support, they push higher. This could invalidate this setup. So that would be good for bulls if they push higher. Kind of have the same candle. I mean, we're seeing the same candle on every chart essentially, but as you can see on comms here, though, they did push up near a pretty good area and then pulled back down. So I'd be looking to see if they hold under previous day close or not on that comms chart. Again, you can go down to the 5-minute. Previous day close is right here. So if they can break under that, that's not looking good. And then financials, we'll just go through the top 5. Which actually, I think industrials are top 5 now. Normally they're not. But overall, they have the same kind of candle too. They're up against a good resistance. They pulled back down. So essentially, we're watching to see can they break under previous day close or not. The 2-day go close. This going into today, this day, we need to watch under their low. So you're kind of watching this day's close, this day's low for a break lower or to see if they hold it. But those are your top 5 sectors. Let's get Devin in here. Or should I join the chat that has more people in it? And just by going through those first 5-6 sectors, you're going through 70 to 75% of the market. So you're seeing most of SPY already just by seeing that. So now okay, well, there could be a short-term pullback, but if it holds, it could lead to another really strong bounce. If it doesn't hold, it could lead to a larger pullback than what we're already seeing. So that's kind of the seat we're sitting in right now for SPY, right before 2 days of Powell. So very, very important. Good morning. Good morning. Good morning, Traveler. Glad to have you. Watching Amazon. Oh, the dark cloud cover. Yeah, yeah. Morning, King Cabina. Morning, Spicy Pepper. Morning, Terry. Daffy said, I will watch 403.46. Alright, I'm going to just join the YouTube live stream voice chat thing.
Yo, good morning, everybody. See what kind of opportunities we're going to get today. Jay Powell's going to speak. He could make it move. He could give us a nothing burger. So we'll see what we get. I like the meta that was talked about already. I like the setup on that one. Looks pretty good. Yeah, definitely a hurry up and wait kind of day, especially with Jay Powell. That's a 30-minute candle type of day. Hurry up and wait kind of day. Because if there is any movement, it will come after Jay Powell either confirms, pausing in the summer. If he kind of dismisses that could initiate a sell-off. There's a couple things that he could potentially say that can make the market move, or he could avoid them altogether and give us nothing burger. So we'll just have to wait and see. Clear up.
Oh, God, Apple. I don't know if that's the move or not, Apple.
Yeesh.
Pre-orders begin this Friday. Start getting them on Tuesday. Yeah, I don't know, man. I just don't.
There's nothing wrong with the one I got right now. They removed one of the.
Yo, it's DX Max's birthday.
Oh, happy birthday! Everybody's birthday month. You have to throw a party.
DX Max.
All day stream Friday party for birthdays or something. Have a birthday party on Friday. Got about a minute till the market open. Jonathan. Banana phone.
Good morning, GC. How you doing, boss? I started it a hair before 30 minutes before the market today. Like 2 minutes. Birthday is yesterday. Hey, Ace. Happy belated birthday then. We're seeing rumors of Amazon popping before open, and those rumors are true. They are popping. Tesla is not. Meta slowed down. Microsoft pulling back right before open. Google had support right before open. So is AMD. So is Nvidia. Same as Netflix. A lot of stocks in crazy spots right now.
Meta popping that yesterday high real quick. My sellers are showing up on SPY, XOM coming down, Tesla breaking pre-market low, Apple's flirting with that yesterday low, pre-market low. Meta rejected instantly. Apple's starting to lose that yesterday low. Not a good sign. See if Microsoft's going to follow. Tesla coming down too. See if that's going to bring Amazon down. Should bring us to test that yesterday low on SPY.
Yeah, they almost did. Yeah, Apple tested the ultimate level at 153.10s. Needs to break that for more downside. If not, you can catch some bounces there. Amazon's still in range. Tesla trying to fight to stay in range. They're having a very ugly start to their day. Meta got a good pop. They're wicking down now. Microsoft trying, kind of in the same seat as Apple, trying to hold kind of their last level of defense at 255.80s. If they do not hold that, we will see more downside. As long as they hold it, you could definitely see some short-term bounces. Same for Google at 94.70. They got a good bounce. Same for AMD at 81. They're getting a good bounce. Same for Netflix at 235. They're getting a good bounce. Watch for Netflix to potentially break 314s here or 312. 312. It's 311.90s. Really, really good start to them, though. Just kind of holding their range.
Only a couple minutes in the market. We've been battling, pushing up, pushing down. Nothing really in control.
Good morning, Jacko. Good morning, Miggy. How y'all doing? Google took off. Good call out by Jazz.
Apple's still flirting with that yesterday low. See if that's going to hold. Microsoft's trying to hold. Meta's trying to get back over, then it immediately wicked as Google's holding up a little bit better than Meta.
Netflix holding out of range too for a second. Netflix and Google did the exact same thing for a second. Second round of sellers here. Let's see if they have the strength to take out the new low.
Short term, getting some seller volume. Meta getting a little bit more of a rejection, but Apple's coming up. So no one directional on any of these big weights. Berkey coming down a little bit with JPM. UNH not really moving too much. Nvidia's slightly coming up. SPY is starting to push up off that pre-market low, midpoint of 405. It's like Apple's coming up off that yesterday low, helping out. Amazon pushing up. Tesla trying to hold pre-market low.
Microsoft pushing up as well. Amazon, really good push, yeah. Apple and Microsoft both getting a little bit of a push. That's helping out. That's your combination for your heaviest, most important sector in the market. And we covered the top 5 or 6 sectors in the pre-market this morning. The one that we talked about when we said XLK was they basically just needed to defend their their wick lows here up to their meat of their previous day lows. And if they could hold that area, they could get a pop. If they could hold under this area, we could definitely see more blood stepping in. As you can see to the cent, they perfectly held that previous day low on XLK, which is again your tech sector. Apple, Microsoft, very, very important sector of the market. So not saying it's going to go to the moon from there. We're just saying it has reached an important crucial area on both Apple's chart and their sector's chart and got a short-term bounce. SPY's bouncing as well, but they're just hitting previous day close. No push over or no close over yet. We'll see here in a couple minutes what they do.
Got about a minute 30 on the first 10-minute candle in the market. Meta's coming down a little bit more. See if that's going to bring Google and Netflix down. Nvidia's still trying to hold up.
Just getting two very indecisive candles under a very, very important level resistance at previous day close. I keep wanting to say today's open. Previous day close. Very, very indecisive candles. 2 of them in a row. Nobody has control throughout the first 10 minutes of today. Good job, Mel.
Yeah, we got our first 10-minute candle.
SPY having some trouble at previous day close. Could call out Daffy. Waiting for Uncle to say something. Literally. Tesla rejecting so far. Previous day low. Good call out. Yep, waiting for Powell. We got 19 minutes. Not really surprised by this open either. This lower open and then the indecisive candles. This all makes sense. Having something important 30 minutes after open 2 days in a row, that's going to definitely affect how the morning trades.
Looks like we're coming to retest that previous intraday low / yesterday low. See if they're going to come down with more steam, or they're going to come down and put a little higher row and make a really tight range before this start of the meeting. But Meta is coming down a little more. Meta definitely coming down. Microsoft having a hard time. Apple just hangs above that yesterday. The low still. XOM under pre-market low. Tesla battling at pre-market low.
Financials and healthcare. Jazz, good call out, saying the healthcare sector is struggling. So is the financial sector.
Yeah,
Sectors that are holding us up are discretionary and tech and comms.
Berkby and JPM both making a downward movement right now.
But yeah, we got Apple, Microsoft sector. You got Tesla, Amazon sector. Then you got Netflix, Meta, Google sector. All 3 holding us up. You also have Staples, very slightly green, which yesterday they were the only red sector for the most part. Meta still pulling back. Tesla trying to pull back more again. Amazon against a really good resistance. Could definitely slow down there. And Apple just kind of stuck inside of their little range they have here between today's low, the 153.10 level, as well as the yesterday's open, sorry. They're stuck in between that right now.
Nvidia needs to pop 239 to continue its move up towards yesterday high. It's like buyers coming in and putting in that Higher low, pretty much lined up with previous intraday low.
Three super indecisive candles so far. Good job, Mel. Meta broke previous day open. Great call out, Jazz. SPY did move a little bit lower there with rising volume, but they did not break the 404. 404 is still intact. Looks like a double bottom on Meta. Apple gearing up for another bounce? Question mark, question mark.
Short-term buyer volume coming in.
Powell's first words need to be pause. Recession canceled. Buy the dip. Yeah, you'd probably see some pretty big Hulk candles on your charts if that was said word for word just like that. Just him saying the word pause alone. Halt. Just getting another good retest of previous day close as well as today's open. Pulling back now, but just kind of chilling in range before the big news. Do you think Jay Powell will make any comments backing what the Atlanta chairman said about the half or a quarter point hike? I mean, he's already kind of been saying it. He was kind of the first one to say quarter point hike, and most of them are on that page. The big thing is that they kept the half point hike open, just to kind of let people know, hey, this can still happen. But no, I think he will back a quarter point hike again. I don't think he'll go back on his words on that. There would have to be some data changes. Data would have to come out, and the labor market would have to be completely different than what it is now. Economy bussin' for real, no cat, buy calls. Rocket emoji. Tesla having some trouble with weekly level 191.30s. Good call out, Daffy. Very strong buyer candle here. Pretty good volume as well.
Got a minute left on the 10-minute candle. The short-term buyer volume is transferring over to the bigger time frame now as we're coming up.
That's the second most volume this morning on the 5-minute.
I was able to see that short-term buyer volume coming on the 2-minute. That's where I was looking at if anyone's curious. Still waiting on J Powell though. Just watching price action. Nvidia pushing high. If it gets over 239, that one's good towards 240, 250 yesterday high. As long as it holds that level, it'll probably grind up. Got that next 10-minute candle in the market. 10 more minutes to J Powell in our first 30-minute candle. Typically, he doesn't talk for too long, so hopefully it's only 10, 15 minutes, so that way we can get a clear reaction. That B&B got a turbo boost. Wag, you ain't full port nothing, bud.
I really don't think much new information is going to come out from these 2 days anyway. They've already kind of said what's most likely going to happen, and they're really just updating the Hill. They're not really going out there and giving them new news. They're already going to be explaining to them what they've already explained to us. So I don't think we're going to get anything new, but I do believe you are going to get some wild swings in the chart. Yeah, we'll see, Daffy. We're still just kind of sticking around this area. They're keeping us just around that previous day low, previous day close area. Levitating. Tesla possibly trying to break lower, guys. Keep that on watch. It's still rejecting a very important level.
We just want the P word. That is right.
Nvidia, AMD slowing down, Netflix slowing down. Ooh, good job, Isaiah, posting in the trade results tab already. I just noticed that's where I put my stream link today. I didn't even put it in trade for. Ooh, good job, Darren. Have a good day, Isaiah. More inflation coming in my honest opinion. Glad you're being honest. Yeah, we'll see. Definitely possible. It's kind of short-sighted to say anything is not happening right now, or something is this, or something is that. It's short-sighted. Anything is still possible from right here, chart-wise, inflation-wise. I think we'll pop fast the drop when he opens his mouth. We'll see.
Pop, drop, pop, drop, drop, pop.
Possible 3-bar play on SPY. Possibly. I like how they pushed above previous day close. They have a second candle holding above the same level, giving this third candle, the one that's moving right now, a chance of actually reaching a higher level. But could also just be indecision before Powell speaks, so.
We got pop, drop, and lock it. We got pop and lock it. I imagine they're both different.
I swear to God. I imagine they're both different. Just the way you said that.
Yeah, can't take any trades before the J Powell right now, so we're all just should be sitting on our hands here. Or we get the dreaded nothing burger.
Cut off my hands for the day. Stitch them back on later. I feel that. Keyword should. Devin like burger. Pop, lock, and lose all my profits. That was good. Does any brokerage put FOMO locks? I'm sure you could set something up. There's no way you couldn't. Be sure to drop a like on the stream if you're in here, everybody. It definitely helps out the channel as well as the streams, getting it out to fresh eyes. Definitely appreciate you. So drop a like on the stream. There's over 200 people in here. I'm sure we can get to 100 plus likes. Be sure to thumbs up the stream. Definitely helps out.
What's the fastest live stream for J Powell? Has anyone really determined that? Like which source?
I don't think this one will be fast because he's like having to update and report it to the Congress. But I have seen him have like 15-minute meetings before, especially
No, I'm
during
talking
COVID.
about like the delay from what comes out of his mouth to like the time it hits
Oh.
our ears. You know what I mean? Like which one's got like 5 seconds, which one's 7 seconds? Because those seconds kind of matter sometimes. Especially like the other day when he said the P word, that other guy, like that made a huge impact. But just the audio. So far, Spy just keeps wicking off below and above, giving us indecision candles on the 10-minute. We're about to get our next candle, so that looks like our 30-minute candle is going to be a what? Indecision candle. Yep, and that's what we got.
God, that opened lower on the 5-minute chart.
And just bled through pre-market low. Oh, we're just leaking now. Okay, the Powell drop. I know he said something already. Sheesh. Market getting excited.
Sheesh.
This new 30-minute candle is just leaking.
That sold off too easy.
Yeah, that's just it's Tesla, Meta's at pre-market low. Microsoft set yesterday low. Amazon starting to break yesterday
Yeah,
low.
watch Apple 153. If that breaks, that's bad.
Volume's coming in. They're pulling us back. But yeah, pretty
Like I said, guys, be careful. You could see a whip to the other side in this exact size. Oh, they're still taking it lower. See if we get 402. Dude, this is impressive.
yeah, they jumped the gun.
That's the most volume on the day.
Somebody knew something we didn't. 402 is about to hit. Gets that. 401 areas next spot. Meta breaking pre-market low. Tesla coming down. Pre-market low on Google. Apple, Microsoft coming down more. Amazon at pre-market low. Netflix coming down. Yeah, Deep just said, he didn't even say a word yet, so be careful. They could wick this stuff right back up. Or they could keep it coming down depending on what he says. I think that was a little bit of an early reaction.
That was pretty impressive. Dun-dun-dun. Are we going to break and hold under 402 now? That is the question.
402's cracking.
This candle still has a minute and a half. A little over a minute and a half.
Coming down lower.
Are left paying the price because you noted Chair Powell, the Fed's tools are only one element in our fight against inflation. It's a complex problem. Interest rates are a single, we know, blunt tool. Raising interest rates can't rebuild our supply chains and fix.
Coming to the end of this 5-minute candle at the low. Looks like we're confirming under 402.
Ukraine. Raising interest rates won't prevent avian flu from devastating 1/3 of our egg supply, or weather disasters from destroying key crops. And raising interest rates certainly won't stop big corporations from exploiting all of these crises to jack up prices far beyond the increase in their costs. Last year, corporate profits hit a record high. Corporate PR chiefs assure us that these companies just have to raise prices. Their costs are going up. The workers just want to be paid too much. They have no other choice, they tell us. Yet when you look at their profits and their executive salaries and their stock buyback plans, sure doesn't look like corporations have exhausted every available alternative. It's so brazen. Even global bankers called it
I have the stream up,
to
Devin.
identify this profiteering is one of the biggest drivers of inflation. Paul Donovan, chief economist of Global Wealth Management at UBS, wrote, "The Fed should make clear that raising profit margins are spurring inflation. Companies have passed higher costs on to consumers, but they've also taken advantage of circumstances to expand profit margins. The broadening of inflation beyond commodity prices is more profit margin expansion than wage cost pressures." Think about that. From a chief economist at UBS, I'll say it again, they've taken advantage, these companies have taken advantage of circumstances to expand profit margins. The broadening of inflation beyond commodity prices is more profit margin expansion than wage cost pressures, unquote. The Fed, understandably, the Fed can't force corporations to change their ways or rewrite the Wall Street business model on its own, but the Fed can talk about it. High interest rates, falling wages, increasing unemployment are all hallmarks of failed policies that end up helping Wall Street, the largest corporations in the country, the wealthiest people in the country. Because let's be clear what we're talking about when people use the economic speak that can cloud this conversation. Cooling the economy means laying off workers. Lowering demand means workers get fewer
Took 3
raises.
minutes on this
Of
10-minute
course, there are
candle.
times when the Fed must act. We can't allow inflation to become entrenched. We've seen encouraging trends that isn't happening. And there are other ways we can bring prices down instead of lowering demand. Again, making people poor, laying people off, denying worker raises. We can speed up and strengthen our supply chains. We can bring critical manufacturing back to the U.S. We can rebuild our infrastructure. It's what we're doing with the CHIPS Act, with the Inflation Reduction Act, with the bipartisan infrastructure bill.
Meta,
For the first
Apple,
time in
everything is
decades,
still
we're finally
straight down.
recognizing the damage that I
Looks
and
like
many
we
of
might
my
hit
colleagues
401
warned
without a retest.
the corporate offshoring would do to our economy. Look at East Palestine, Ohio, a community that Senator Vance and I have visited a number of times recently. America learned about this small town last month when a Norfolk Southern train derailed and spewed hazardous material into this community. East Palestine is more than just a disaster headline. Columbiana County was once the center of American ceramics manufacturing, at one time producing 80% of ceramics of dishware in this country. One county produced 80% of it. When I was there last week, I was talking to the sheriff at the 1820 Candle Company. He was talking about how the last one closed just a few years back. Like so many industries, these jobs moved overseas, and we know why. The same reason Norfolk Southern cuts cost at the expense of safety, eliminating one-third of its workforce in the last 10 years. Then you're surprised with these derailments? It's the same reason corporations now keep prices high even as supply chains stabilize. It's the Wall Street business model.
A lot of
Chair
shares
Powell
get
knows
traded.
that. I know that. My Republican colleagues and Democratic colleagues know that. It's a Wall Street business model. Quarter after quarter, corporations are expected to cut costs at any cost. They skimp on safety. They move production overseas to countries where they can pay workers less because of trade deals that they lobbied for. And Wall Street demands they post profit increases, even in the middle of a global pandemic. That's the problem with our economy. And not only will higher interest rates not solve it, if they're overdone, they'll make it worse. We can't risk undermining one of the city. For the first time in decades, workers are finally starting to get a little power in this economy. Unemployment's at a historic low, 3.4%. That's not just a number. That means Americans have more opportunities, more options, even in places that have seen a lot.
15 seconds left on this 10-minute candle. We might close under 401 here.
Retirement security and paid sick days, and
No
some
buyers
control
showing
over
up.
their schedules. It means more Americans have the dignity that comes with a good
There's a
job
couple.
and provides for your family. We must here ensure that all Americans have the opportunity for that dignity of work. It's a critical time. The consequences of missteps could be severe. Mr. Chairman, two more things that affect your job. It's not just monetary policy that threatens American pocketbooks. Some of my colleagues have threatened the nation's full faith and credit by holding the debt ceiling hostage for partisan politics. Instead of paying our bills on time, they're essentially threatening all Americans. The Fifth Circuit's Consumer Financial Protection Bureau ruling could also cause unimaginable instability and chaos for families, for consumers, but also, as the chair knows, for a financial system. The Fifth Circuit is Wall Street's, no doubt about it, the Fifth Circuit is Wall Street's favorite courthouse. It recently ruled the CFPB's independent funding is unconstitutional. If the Supreme Court upholds the Fifth Circuit's ruling, it will not only devastate CFPB, it will threaten the independent funding of many other federal agencies, including the Federal Reserve. I look forward to today's hearing how the Fed will balance its dual mandate and continue to promote an economy where everyone who wants a good job can find one, an economy that works for everyone. Senator Scott. Sorry.
If we come down through all this, I'd expect $3.99.
Sitting here, looking at my prepared remarks, thinking about, there's an opening coming.
Where it retested before it blasted off.
I think it's really important for us to make sure that all the information that we need in order to make a good decision on the next nom that we have in a timely fashion. So I would really implore the chair to make sure that happens, that every questionnaire that is asked from the person, we get. Every member of this committee has their questions answered in a timely fashion, and that the staff has their answers in a timely fashion.
Is this where they're going to start launching it back up?
Listening to Chairman Brown, I thought to myself, fascinating, truly fascinating. I concluded that, well, I know Chairman Brown pretty well. I am sure he is sincere in his rant. But let me just say this. Spending and printing trillions of dollars, caving to the radical left in this country, seeing policies posited and then implemented that led to the worst inflation in 40 years, seeing our inflation at 9.1%, seeing American families struggle because of the weight.
All right, we'll pull that back up if there's more news coming out. They just seem to be all kind of covering their own bases for now, and then we'll probably hear him see more news come out. But oh, this guy does seem based. He seems like he knows what he's about to say. But really good push under the 404s from the initial start of that movement in that committee. Broke 350, broke 402, went all the way down and tested 400.60s real quick. They were 9 cents under for a second, pulled back up on this candle. So it looks like you're probably going to get a buyer candle to at least test 402. I wouldn't be surprised if you tested halfway of this big-ass red candle either. So if you want to go ahead and grab a fib from open to close of that candle, be my guest. That would be the other area that we're probably headed towards if buyers do step in for a short-term reaction. So let's say 402, 403 area, watch out for that. And look for them to range trade in between there for a little bit if they do not push new lows or new highs in that time period. But overall, that is most likely what you're going to see for a little bit. Imagine you're watching that committee, though, and you just see somebody on their phone, and that's them closing their puts.
That would be bad.
They're like, ha ha ha, I knew it. I knew this sumbitch was bearish. Yeah, everything broke down pretty well. We had an alert in my channel go for Netflix, and that seemed to have done very well.
Even though it seems like we've moved a lot, we're only down less than 1% on SPY, so they could still sell it off quite a bit more if that's the direction they're going to take it. Or we could come back up and try to retake from where we sold off from. So we got to wait and see now.
There is a better way. The better way is to trust the American people.
Oh, just trust the American people, bet. That's so easy to do. I forgot how easy that was. The thing that makes me laugh from time to time is that Pelosi's not outperforming the market anymore. She really needed that info. Dude, for real. She's been underperforming so hardcore since then. But even if she isn't, though, I would say she has one positive thing from everything that happened with her in that situation was that she has less attention on her now. So I'd say she also, not only has she been underperforming, but she also doesn't have as much attention on her. So there's not like, we're not sitting there just staring at what Pelosi's doing every day, every single week. Like, it went from us, like, people literally attacking her to saying, all right, well, she's not up here anymore. Don't worry about it. So that is one thing she got out of that, I would say. She might be sucking, but at least she's not sitting there with the light on her the entire time. Because it started getting pretty heated in some interviews. You'd see multiple people be like, hey, Pelosi, what's up with your semiconductors? How you doing in those? Like, things that had nothing to do with it. So it was pretty crazy. I mean, well deserved. She deserves to get heated questions. I'm just saying, that's how heated it was getting. It was just open fire every time. So, I'm kind of happy those days are a little bit behind us now, to be honest. Because there's still plenty of people in Congress who are still trading just like her. So, that's the bigger problem that everyone's overlooking by just open fire on Pelosi, is that they're missing the whole point, is that, like, everybody's literally doing this. It's not just Nancy Pelosi. She was just the most flagrant about it. So I don't know. I think other people need to be held responsible as well. You can't sit there and tell me it's just Pelosi. You know, we seem to just still be battling right above 400.60s. Whole system corrupt, exactly. But now that's the focus, you know, whereas before it was just, all right, just attack Pelosi. We know we don't like her, which, yeah, of course we don't. But two, you know, it kind of takes the light away from, like, all right, let's look at everyone as a problem. It's not just Pelosi, like, everybody, Republican, Democrat, they're all up there doing the exact same thing. I do have a lot of stocks at very peculiar spots. You have Netflix trying to hold 306.60s, see if they can get a bounce back to 310. Nvidia is at a bigger time frame level. AMD surprisingly is actually trying to hold the previous day low. Same for Google. Microsoft is down in the dirt, testing 254.20. Meta at the previous day low. Tesla at a historical level, 188.20s. Amazon trying to fight back to get above 93.20. They are still rejecting that. And Apple pulling back down more, looking like they want to take out new lows again. Oh, fuck. Pal
We
speaking.
have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we'd seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above the FOMC's longer-run objective of 2%. The 12-month change in total PCE inflation has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing, a category that accounts for more than half of core consumer expenditures. To restore price stability, we'll need to see lower inflation in this sector, and there will very likely be some softening in the labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy has slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remained very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each
Getting some buyers.
individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historical lows. Turning to monetary policy. With inflation well above our longer-run goal of 2%,
They're coming off that 401 pretty hard now.
the FOMC
See if we can get over that
continues to tighten the stance of
402.50.
monetary policy.
Meta back at
Rates
pre-market
are
low.
percentage points over the
Extra
past
limit
year.
pre-market low.
We continue to anticipate
Banks
that
coming up a little
ongoing
bit.
increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past two meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the
Holy
outlook of
buckets, my
economic
mobile
activity.
connection put the John Wick 4 trailer into your
Although
stream.
inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level
All
of
right,
interest rates
retest slowing down a little bit.
higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes.
All right, so just saying if they needed to, they
Restoring
could.
price stability
It's
will
not
likely
saying they
require
are.
that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Federal Reserve, we will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chair. There are 23 of us on this committee. Almost everyone will be here today. I ask each of us to stay as close to the 5-minute mark as we can because we have votes at 11:30. So thank you all for your cooperation. Chair Powell, thank you. Job growth is strong as unemployment remains historically low.
And now you're going to get a bunch of chop as they ask him a bunch of questions.
Many drivers of inflation, corporate greed, rising inequality, supply chain disruptions, Russia's bestiality, if you will, in Ukraine won't get better because of interest rate increases. Every indication is that this post-pandemic economy is different. Should we be worried, Mr. Chair, that the Fed is treating this economic period as it has in the past instead of reacting differently?
Thank you, Mr. Chairman. So we've been aware since the very beginning and have discussed this publicly on many occasions that there are some differences this time. We, in particular, have not seen the kind of supply side collapse that we saw at the very beginning of the inflation outbreak. Also, the outbreak of a war which had significant effects on commodity prices a year ago. So all that is different. There are also, though, some similarities. There is a mismatch between supply and demand. You can see that in the goods sector still. You saw it in housing prices going up over 40% since before the pandemic, and you see it in the labor market where we have 1.9 job openings for every unemployed person. So we're well aware that this particular situation involves a mix of cycles of forces, not all of which our tools can affect, but there is a job here for us to do in better aligning demand with supply.
Okay, understanding you have limited tools to address inflation, in our conversations in the past show my concern about continued rate increases that may not actually address the root cause of inflation. They hurt workers, and many of us contend we can't follow the same old playbook. Next question. Last year, 3 banking regulators issued proposed updates on the Community Reinvestment Act to account for changes in our banking system. My question is, does the Fed remain committed to work with FDIC and OCC to finalize a CRA rule, and when will that rule likely be finalized?
Yes, we do remain committed, and I believe we are in broad agreement with the other 2 agencies on the revisions to the rule. So now we're in the process of writing all that down, and that'll take some time. And then after that, of course, it will come to the Board of Governors for a vote, and that'll involve briefings.
Some brisket street tacos. That sounds good.
I can't give you an exact date, but
as quickly as possible.
Yes, but it will be some months.
Thank you. Banks weathered the shock of the COVID-19 shutdowns mostly because of the fiscal response provided by Congress. We now see a spike in loan delinquencies, an increase in overall risk. Banks are again plowing billions, as many other corporate leaders, always defended by people on that side of the aisle, into stock buybacks, which makes me concerned that there's a downturn in the economy. Banks could end up with too little capital. That's why I'm worried about any potential rollbacks of safeguards.
I got you, $10.
Can you assure me that the Fed will keep capital requirements strong and exercise more long-term forward thinking than corporate CEOs?
How's everyone in the stream doing, though? Stay awake.
That will we'll keep.
Meta's having a pretty good bounce. It's getting over that pre-market low.
Expect you to comment on,
See if that's going to hold up over pre-market low.
Or looking more forward than companies that look at the short-term benefits of stock buybacks. Mr. Chair, when you last testified, I asked you about the risk posed by crypto assets, stablecoin, the Fed, and other regulated possibilities. How's the Fed evaluating the risks of crypto-related activities by your supervised institutions?
So this is something we've been quite active in this area, and I'll say that we believe that innovation is very important over time to the economy. We don't want to stifle innovation. We don't want regulation to stifle innovation in a way that just favors incumbents and that kind of thing. But like everyone else, we're watching what's been happening in the crypto space, and what we see is quite a lot of turmoil. We see fraud. We see a lack of transparency. We see run risk. Lots and lots of things like that. And so what we've been doing is making sure that the regulated financial institutions that we supervise and regulate are careful, are taking great care in the ways that they engage with the whole crypto space, and that they give us prior notice. And we've issued, along with the FDIC and the OCC, a number of
possible turnaround if they get back above 402. Above 402, you have 403, 403.50 range.
And I will close with this. I've long pushed for the Fed to prioritize workers and for the leaders of the Fed to reflect the diversity of our country. We've made progress, but our work is not done. We have a new opening. Understand, it's not your job to appoint the new Fed member. We have a number of upcoming vacancies at the reserve banks. I support Senator Reid from Rhode Island, Senator Menendez from New Jersey, and other colleagues.
Retest of the 9 on the short-term time frame. As Meta's pushing up a little more. XOM still trying to get pre-market low. Amazon's at yesterday low. Tesla's not near as close, but coming up a little bit.
Having a strong capital markets as it relates to making sure that Americans have the ability to continue to grow their businesses and to solve their challenges. And frankly, I hope that we get there. Building on the same comment that Chairman had around capital standards is where I'm going to go with my thoughts today. When I think back on these last few years, it's hard not to recognize the extraordinary efforts our financial institutions of all sizes, frankly, undertook to administer a program like the PPP, all while weathering a shutdown of our global economy. I welcome your thoughts, but from my viewpoint, our banking system was resilient. Our financial institutions stepped up and delivered aid to support families and businesses every single day. That's why Vice Chair Barr's broad comments around holistic review of our capital troubled me so much. We should be laser focused on our economy and addressing the needs of everyday Americans trying to forge a new future and helping them open the door to opportunity. As you and I both know, capital and its quality must be continually scrutinized, but increased capital does not necessarily provide an increased benefit, and requiring banks to hold capital that is not risk-based and appropriately tailored to a bank's size, scope, and activities can cause more harm than good. At a time of record inflation, where everyday needs are more expensive, we should not be pursuing actions that are harmful. Rather, we should be supporting the engine of our economy, small businesses. While I remain greatly concerned
by getting over that 402.50 now,
that you will ensure this review is appropriate, keeping the impacts on our banking system front and center. We must.
Oh, good looks, RC. Well, I said as long as we get a buy reaction that holds 400.60s, you'll most likely see 402 and maybe 403, which is the halfway point of this bigger red candlestick. to be tested. Those have both now been hit. So I'm going to remove that just so we have less junk on our screen. But both levels have been hit from what I was mentioning earlier to y'all, as long as we hold 400. That seemed to have worked out very well.
Amazon and Microsoft getting closer back to their yesterday lows. Apple as well. Tesla creeping up to pre-market low yesterday low. Google getting over that pre-market low, pushing towards where it sold off from. Meta's still doing the best.
Good call out Zaytoven, good call out D-Touch. AMD getting going. So is Nvidia. Netflix also catching some more buyers. Good job, GC. Yes, Powell is still speaking. They are still asking him questions. They just said there was 23 of them. So they're going to be asking him a lot of questions. As I said a few moments ago, you can expect price to chop around in a larger range while they're asking these questions. The only revealing information that he said that really isn't anything has just been that if they need to, they will raise the rate hikes more than anticipated. That's all they have said, is that they definitely can if they need to, but they have not said they are going to. There's really been just nothing released today. It's really just an update.
Then I believe
We already know all this information.
Challenge of not being able to address specifically the challenges brought out.
But no, he's not specifically speaking right now. They're asking him questions.
Higher prices with regard to energy.
So I'm sure he's getting like a minute to their 5 minute. XLC is the lone green sector right now. That's your Meta, Google, Netflix sector. You're at work sitting on your hands. Your boss just walks over. What are you doing? You know. Your hands are all red from sitting on them.
Why are your hands falling off? 'Cause you're sitting on them. Why are your hands falling off? 'Cause you're sitting on them. 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 ' I tried to cut them off.
Trying to get you to a policy discussion with what the president's doing on his energy policy. I just want to make it clear that you have to respond to what's in front of you, and it doesn't matter where the inflation is coming from or what's driving it up. You're simply trying to bring it back down to that 2% number with the only tools that you've really got.
Yes, but I will say on energy, energy has tended over time to fluctuate up and down, and it's not mainly affected by our tools. So the things we look at are are really things that are tightly linked to demand in the U.S. economy. Those we can affect.
And I think just the fact that you've been increasing interest rates, and yet inflation continues to ride up, would suggest, just as you've just indicated, that when you have high energy prices, it's tough to import.
Right now, SPY's battling the 9 on the 10-minute, has not confirmed above, had a push above and rejected, so we're seeing if we can get above that.
We also focus on core in particular, which doesn't include energy prices, and what's happened is core inflation has come down, but nowhere near as fast as we might have hoped, and it has a long way to go.
Thank you. One last question. Last June, Vice Chairman of Supervision Michael Barr testified before this committee that he would defend the use of the aggregation method as an alternative approach to the insurance capital standards, the ICS, proposed by the IAIS. As the final compatibility criteria set to come out later this year, can you confirm that you share Vice Chair Barr's views on this AM?
I will confirm that, but I'll have to get back to you on the status of that.
Okay, thank you. Thank you, Mr. Chairman. Thanks, Senator Round. Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I want to take this moment
Mr. Chairman.
To remind my colleagues that there are more than 62 million Latinos that call the United States home. We are the largest minority group in the country. We account for nearly 20% of the United States population. We contribute almost $3 trillion in GDP. Yet Latinos have no representation in the Federal Reserve's leadership. In the 109-year history of the Federal Reserve, there has never
Is this really the time to be asking this?
been a single member of the Board of Governors or regional bank president who has the lived experience of being Latino in the United States. And in practice, that means that the voices of nearly 1/5 of our country's people are repeatedly drowned out when the Fed
My guy is bringing race into the inflation conversation.
decisions that affect whether a Latino family can afford their first home, find a job that pays
This
a
is
living
crazy.
wage, send their children to college.
Every time I hear this shit asked, it just blows my mind. This guy doesn't care about our country and pushing it forward. Oh my God.
It has identified a number of highly qualified Latino candidates who have dedicated their careers to the field.
See you later, Wag. Thank you for being here, man. That brisket
Have a
sounds
good day,
good.
Wag.
Who will preserve the independence of the central bank. The administration has rightly nominated and advocated for a number of diverse candidates with similar qualifications, both at the Fed and elsewhere. But despite having 5 opportunities over the past 2 years to nominate a qualified Latino economist to serve at the Federal Reserve, this administration has repeatedly chosen not to. Representation, or lack thereof, does not happen.
We can't go red now. The market would be racist if we tanked on this. Dude.
The administration makes the right choice with this nomination.
He said,
Mr. Chairman,
y'all have denied people
would
over the
you
last
say
2
that
years.
it is,
I'm tired of it.
a
It's like,
truism
chill.
that the United States dollar is the reserve of choice in the world?
I don't know if
Yes,
you
sir.
wanted one of your
And that
people
brings
to
us to
be
all
up on the
the
board
dollars.
during this time period. Like, damn.
Now, 12 years ago, a Republican House brought us to the brink of defaulting on the debt for the first time in
Literally,
history of the
Candace.
country,
Literally.
jeopardizing our credit and the world.
All right. Well,
economy.
I'll
getting
mute
sense-
this and bring it back whenever they're not asking dumb shit. But yeah, market's tanking off of irrelevant news. It's not actually off of that news. It's probably just relief selling from all this relief buying that just happened. You had pretty bad news come out. They sell it. They get a little buy reaction once they reach a pretty important psychological level, around 400 that is. They got a nice little bounce. They touch the 403 like I told y'all they would, because they most likely want to at least test the halfway point of this dropping candle. Anything past that, you would need to see confirmation over. So that's why I said at least 403. Now we're getting a slight seller reaction in the same sense you got a buyer reaction off of support after getting such seller momentum. So now you're getting some sellers. Now the next thing to look out for is, can they take out this new low, or are they just going to hold us in range? Most likely they're going to hold us in range, but they do always have that possibility of making that new low. So keep that in mind. Man, that's fucking disgusting to see that ass at such a high level, though. Has nothing to do with race. We're just focused on inflation, my man. Inflation does not care what color you are. You're saying George Lopez? I could maybe understand him bringing that up if it was like a popular topic, like everybody, like that was on everybody's mind, like, oh my god, I can't believe you never had a Latino up on the federal board, blah blah blah. Like if that was a big thing, but literally nobody's talking about that. That's probably like the one dude who's pushing that.
So far, kind of slowing down for a higher low here against 401.
It's not even an election. For real, dude's going hard. Oh, they're asking about the balance sheet. Finally.
Very far from our price stability mandate, and in effect, the economy is past most estimates of maximum employment.
Thank you, Mr. Chairman.
Thanks, Senator Menendez. Senator Kennedy of Louisiana is recognized.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. Thank you to you and your team for helping to save the economy during the pandemic meltdown. For what it's worth, I'm generally supportive of the
This guy
actions
always
of the
goes
Fed
trending
right now,
after these
and
things.
I'm not going to ask you today to blame anybody. When Congress spends money, it stimulates the economy, does it not?
Well, it would depend on whether that's funded by tax increases or not. So if there's a spending that's not accompanied by taxes, would have a net at the margin stimulative effect.
Well, and when Congress borrows money to spend even more, that stimulates the economy even more, does it not?
At the margin, yeah.
Okay. If Congress reduced the rate of growth in its spending and reduced the rate of
This guy right
growth
here's like, what the hell am I doing
in
here?
its debt accumulation,
Look, I'm gonna get on some Angry Birds.
it would make your job easier in reducing inflation, would it not?
See you later on, Jay. Have a great day, man.
I don't think fiscal policy right now is a big factor driving inflation at this moment, but it's absolutely essential that we do slow the pace of growth, particularly for the areas of the budget.
All right, let's try to unpack this then. I'm not trying to trick you. You're raising interest rates. You're raising interest rates to slow the economy, are you not?
Yes, to cool the economy off.
And one of the ways you measure your success, other than fluctuation in gross domestic product, is the
PCE.
unemployment rate. is it not?
Yes, one of the measures.
Okay. So in effect, I'm not being critical. When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not
the
wages.
I'm not trying to
raise the
trick you. Is a setup for a trick, 100%, dude. Literally.
There are a lot,
And
there are a lot of,
that mean I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, are you not?
no, we're not trying to raise it. We're trying to realign supply and demand, which could happen.
not what they're
through a
trying to
bunch
do,
of
that's the
channels,
effect
for
of what they're
example,
doing.
Just job openings.
All right,
Job
let
openings
me
could
put it another way, okay? The Economist did a wonderful study. They looked at 10 disinflationary periods in America going all the way back to the 1950s. Disinflation.
I think
is
the
what
real
you're
issue is
trying to
there are
do.
no
It's
Eskimos in the
slowing
Fed board.
in the
See,
rate
I'm behind that
of
movement.
inflation. Am I right?
yes.
In other words, prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay. Based on history, in the 10 times that we got inflation down, disinflation since the 1950s, in order to reduce inflation by 2%, unemployment had to go up 3.6%. Now that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there have been recessions and downturns when the
Okay.
Fed has tried to reduce inflation.
Now, right now, the current inflation rate is 6.4%, and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again, blame anybody. But if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay, and to get inflation down to 2.2%, based on history.
Yo, these glasses kind of making me laugh a little. I'm not gonna lie. I'm not trying to be an
Would have
ass.
to go to 10.6%.
That shit's kind of funny.
Would it not?
No, I wouldn't.
That's what the record shows. That's what the history shows.
Yeah, I don't think that kind of a number is at all in
I
play
mean,
here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable. It's undeniable that the only way we're going to get this sticky inflation down is to attack it on the monetary side, which you're doing, and on the fiscal side, which means Congress has got to reduce the rate of growth of spending and reduce the rate of growth of debt accumulation. Now, I get that you don't want to get in the middle of that fight. But the more we help on the fiscal side, the fewer people you're going to have to put out of work. Isn't that a fact?
Please answer.
It could work out that way.
Sir?
It could work out that way.
Yes, sir. Thank you.
The hell is this
Senator Reed of Rhode
ticking?
Island.
Like somebody's got their tea
Thank you very
glass.
much,
The
Mr.
hell was
Chairman.
that?
Thank you, Chairman, for being here today.
He's like saying his time's over.
We
It's like, dude,
saw
just speak
in the
up.
wake of COVID, the globalized supply chain disrupted significantly, and we're in the process of, in some respects, of rebuilding a supply chain with emphasis on sourcing in the United States. What extent did that disruptive supply chain contribute to inflation, and to what extent will the new, if you envision it,
Bro, is he
new
talking without
supply
moving his
chain
lips? What's going on?
in the United States and other friendly countries affect inflation?
So the initial
How is he
outbreak of
doing that?
inflation was all about spending on goods where people couldn't spend on services. So goods spending went way up, and the global supply chain, many goods are imported. The global supply chain just collapsed, and that was the source of the original inflation. It has now spread.
That was
in the last 2
wild.
years to housing, and also to. The
Bro, his
rest
head
of the
was a
service
perfect
sector.
sphere.
So to your question, we are seeing goods prices, goods inflation.
That guy's got a good
has
head
been
on his
coming down
shoulders.
for some time now. It's still too high, but it's coming down. Housing services is there's in the pipeline.
Bro,
is
Powell
the new
just looks
leases
tired.
are
He's
being
like,
signed and what that
he's like,
does
bro, I've been
is-
practicing
and
saying these words for
next
months now, and
we
here I
will see
am.
that come down. But this big service sector, that's everything else, which is financial services, medical services, travel and leisure, all of those things. That's really
All right, so we got a test of 400s again. Keep eyes on watch of the 400 flat to 460 area. If this ends up holding, this can be a good base for consolidation for the rest of the day. If it ends up breaking, we're definitely going to be seeing under 400 towards 398.50, possibly 397.30s, which is from the bigger time frame.
Tools are famously powerful but blunt.
A different topic, and that is, as you're probably aware, the Fifth Circuit
Was that Morty?
Delivered a ruling in the Community Financial Services Association versus CFPB that the CFPB's funding mechanism was unconstitutional. Just like the Board of Governors, the CFPB is a bureau of the Federal Reserve. Both the Board of Governors and CFPB
This guy's spitting.
rely on the same source of funds and draw on those funds in virtually identical ways. If the Board of Governors funding structure would be found unconstitutional, what would the implications be for?
I don't know, Kenneth. I really don't pay attention to the House. I just pay attention to the Fed.
It would be very significant.
The
but
Fed
I
have been
have to
telling
say,
us
I-
the same
we have
story for
significant
weeks now,
responsibilities,
so
but
I would just focus on them.
Be reluctant to comment on a case that's before the
I really
Supreme
don't
Court.
focus on the whole narrative bullshit.
But it is certainly.
He's
something
got
that
packet loss.
people examine possible.
Yes, and the central banks tend to be self-funding because of the way they work, and that's a key factor of our independence.
We've going back and forth on the impact of rate hikes on workers, and you've indicated previously that wages have not been spiraling upwards necessarily, and that inflation expectations are currently stable. But the impact on increased interest rates are usually felt more by low to moderate income people. Is there any way you can work yourself out of that dilemma?
So where we are right now, of course, is very low unemployment. Wages have been moderating, and they've been doing so without a softening in the labor market, without a rising unemployment, really, and that's a good thing. So we really don't know. The current situation is a combination of more typical supply and demand issues, but also just things that we haven't seen before, like the war in Ukraine, like the supply chains that you mentioned.
Right.
So we have many unusual factors, and I don't think anybody knows with confidence how this is going to play out.
Thank you very much, Mr. Chairman. Thank you, Chairman.
Thanks, Senator Reid. Senator Brett, Alabama is recognized.
Thank you, Mr. Chairman. Chairman Powell, it's great to have you here today. Over the past 2 years, we've seen the highest inflation of my lifetime, driving up costs for Americans.
Alright, well that didn't work. I was wanting to play it throughout the other file. I'll just go back to this.
The price of food, energy, and housing have all skyrocketed. In response, the Federal Reserve has raised the Federal Reserve Fund rate more than 4 percentage points. Being far from transient, inflation has remained persistent, high, and well above.
Why did she look so happy? She does look a little happy.
Of remaining under.
Or maybe she's just a happy person.
In the coming year, what factors and indicators are you?
We'll see you later,
paying
RC. Thank you for
attention
tuning in.
to as you and the Federal Open Market Committee decide on whether to increase rates?
So I'd say a couple things to that. First,
She knows she's on
we're gonna
camera.
be looking at
Drugs.
the three sectors that I mentioned: the goods sector, the housing sector, and then the broader service sector. And we need the inflation that's already underway in the goods sector to continue, and that's really important. In the housing sector, we just need the time to pass so that reported inflation comes down, and it's effectively in the pipeline as long as new leases are being signed at relatively small increases. So we'll be watching very, very carefully, though, at the larger service sector, which is 56% of consumer spending, and more than that of what's currently inflation. So that's one thing we'll be watching that very carefully. Also, we raised rates very quickly last year, and we know that monetary policy, tightening policy, has delayed effects. It takes a while for the full effects to be seen in economic activity and inflation. So we're watching carefully to see those effects come into play. we're aware that we haven't seen the full effects yet, and we're taking that into account as we.
New low down spy.
So when you're looking at this, obviously not to get into a policy discussion, but if there were an increase of energy production in this
With
country,
increasing
do you
volume
feel like
coming
that
in
would
on the
help
10-minute
drive
here,
down
so
inflation?
could get a nice push.
Well, I think over time, more energy would mean lower energy prices. But we are very focused on what we call core inflation, because that is what is driven by, really by demand, and our tools are really aimed at demand.
Right.
New 10-minute candle
cost of
opening up,
energy is
you're
not
low
just
at
what happens
dead.
at the pump. It ends up affecting every good across this great nation. Additionally, I'd like to ask you about labor participation. So when you look at the unemployment rate, and we've heard my colleagues discuss people having to be displaced.
Yeah, Rambo, looks like Jay Powell's trying to spit some game.
Rate that we would like as a nation. I'd like to focus on the labor participation rate. So right now it's 62.4%. If there were an increase in people coming back into the workforce, would that be a positive factor with regards to driving us down to the 2% rate that you would want to achieve?
I think that it would. I mean, remember those people coming into jobs.
Yes.
That would be great, because the economy clearly wants more people than are currently working. Of course, those people would then spend more, so it wouldn't be a zero-sum game. But it would be great for the country and great for them if they were to come into the labor force.
Amen. I believe that increasing in capital requirements on financial institutions would have a chilling effect on the economy and the availability of financial services. And last week, I joined many of my colleagues in sending you a letter that expressed concerns that if the Federal Reserve decides to conduct a, quote, holistic review of capital standards, as we heard Senator Scott talk about earlier. So is the Federal Reserve concerned that the impact to the economy of increasing capital requirements on financial institutions at a time when inflation remains persistently high would cause an issue?
So I think it's always a balance. We know that higher capital makes banks safer and sounder. We also know that you will at the margin provide less credit the more capital you have to have. But I think it's never exactly clear that you're at the perfect equilibrium, and it's a fair question, I think, to look at that.
And I know out of respect for the chairman and trying to stay in my time, I will just end by saying I heard what you said. Obviously, as you have said, the Federal Reserve is not and will not be a climate policy maker.
Don't ever take that previous low at dead.
I agree with you that there's a difference between policymakers and financial regulators, and certainly look forward to working with you in the future.
Thanks, Senator.
I liked her.
From Virginia is recognized.
Thank you, Mr. Chairman.
All right, back to the music. You guys don't get to watch that anymore. Sticking to the plan, 5 out of 5 trades stopped out over 2 days. I'm losing money at a way slower pace now. No, it's not over. It's not over. It's still very much going on.
Next week, but I want to net. We've still got ways to go, and the January numbers were concerning. But I do think your tailored approach. We can all second guess, but
I don't really care about these people's opinions anyway. They're just getting an update. It's the Fed that you want to pay attention to, and they've been telling us the truth pretty much the whole way through. If you think otherwise, you just haven't been paying attention. The Fed have been pretty straightforward about what they want, what they expect, what's still available. Right now I'm making a new channel though in chat real quick. I don't know what I'm going to name it.
Cool Kids Club.
Still fighting at this 400.60s area. That's not what I meant to do.
Retesting the 9 again on the 10-minute, wicket off.
Alright, so there's a new channel in my chat. It's called BB Traders. I didn't really know what else to call it because I'm boring. But feel free to type any types of trades you guys enter or exit in this channel if you want to. I had a few friends give me the idea, so I thought I'd finally add it to the server. But feel free to type it. I just type pro. It's just as a joke. There's no such thing as a pro. You guys know this. But feel free to drop your entry, exits, all that good stuff in here if you want to. But had a few requests for us. I thought I'd add it. Just be comfortable if you're going to post. Don't just go post to post. Be comfortable with what you're posting. Jesus, y'all are something else. People just keep typing in there and then deleting their own message. Like, shut up. I swear. Good morning, Money Lisa. How you doing? Just came here for the like. I'm still dying. Oh, that's right. You were sick. You got the chat disease, the chat virus. I hope you feel better though. Watching the Fed meetings is like watching my grandparents argue over what they're going to have for early lunch. LOL. But then they just get tired and have a nap.
I think it's quite important, again, given the legislative intent here and the concerns that we maintain that in the face of what General Counsel said just yesterday. I appreciate your perspective in terms of keeping that in place. I'd like to come with my next question, Chairman Powell, with starting the question by underscoring the importance of the independence of the Fed's monetary policy. Right now, the economic picture is about as uncertain as I can remember. We've had large companies in the private sector who are in the midst of planning layoffs and forecasting serious economic weakness in the quarters to come. Yet, on the other hand, the current economic data seems to be robust. Inflation showed some signs of softening in the past several releases. So I just hope, Chair Powell, that you could briefly tell us how you synthesize these seemingly contradictory data.
So, just quickly, at the end of last year, we saw a couple of very promising, modest inflationary readings in November and December. But earlier this year, some of that improvement was revised away. In addition, we got a very strong reading on inflation in January, also a very strong jobs reading, also very strong retail sales. And so, as I pointed out in my testimony, we're looking at a reversal, really, of what we thought we were seeing.
Yeah, stay away from sinful.
It's still true. It's still the case that we're seeing progress on inflation. We're seeing goods inflation has come down significantly. There's improvement in housing.
Gave you the cheese touch.
Not a lot of improvement.
Oh my God, dude, that is so old.
The largest sector, which is non-housing services. So inflation's running core inflation's running at 4.7% on a 12-month basis. I think nothing about the data suggests to me that we've tightened too much. Indeed, it suggests that we still have work to do.
In that context, thinking about where the tightening goes and when it might, where and when it might happen, where do you see the terminal Fed funds rate landing in this cycle?
So we last wrote down our assessments, individual assessments of that in December, and I think the median range was basically people were clustered between 5 and 5.5. We're going to write down those again as part of them. We do it 4 times a year. We'll do it around the March meeting, which is on the 21st and 22nd of March. And as I indicated in my testimony, I think the data we've seen so far, and we still have other data to see, we still have significant.
It's a good thing I'm not Jay Powell, for real. Holding under control point of last 30-minute candle on SPY, sitting on 9 SMA on 2-minute. Great update, Taylor. Thank you for providing that info. Apple came all the way back up, rejected the area to the downside. Tesla too, they came back up, rejected. They're just kind of in range now. Microsoft did the same thing. Google did the same thing. AMD's honestly kicking some serious ass today. They're up 2%, making a new high of day. Honestly, just impressive where they held from, like after they came back up here. The fact they came back up and held here, which is where they first had struggle with, is just so impressive. And then to bounce and make that new high. Very, very impressive day for AMD. Nvidia not really reacting much with that. Netflix making a higher low and a lower high here very recently, so they're squeezing. SPY coming back down, possibly trying to make another new low of day.
Fighting for that new low a day. Do we get it? Right, Mike, ready,
Let
fight.
me ask you about what happened.
Oh, it's Elizabeth
to
Warren.
cities. Since the end of World War II,
Oh, she's the
there
worst.
have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year. Exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
You know, it's not as black and white as very
Just
very
looking at the
infrequent.
numbers, it actually
yeah,
is
no,
pretty black
Alan
and white.
Blinder's written a book on this, and
There have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right. So then the question becomes, we've got 2 million people out of work. Can you stop it at 2 million people? History suggests that the Fed has a terrible track record of containing modest increases in the unemployment rate. Once the economy starts shedding jobs, it's kind of like a runaway train. It is really hard to stop. In fact, in 11 out of the 12 times that the unemployment rate increased by a full percentage point within 1 year, unemployment went on to rise another full percentage point on top of that. If that's what happens this time, we'd be looking at least 3.5 million people who would lose their jobs. So, Chair Powell, if you reach your goal and 2 million people get laid off by the end of this year, and then, just like in 11 out of 12 times that unemployment has risen by a point in a single year, it keeps on rising. And then we've got 2.5 million people out of work. We've got 3 million people who get laid off. We've got 3.5 million people who get laid off. What's your plan?
Well, right now the unemployment rate is 3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control.
I'm looking at your projections. Do you call laying off 2 million people this year not a sharp increase in unemployment?
I would say 4.5%.
Explain that to the 2 million families who are going to be out of work.
We're not, we're not targeting any of that. But I would say even 4.5% unemployment is well better than most of the time for the last 75 years.
In other words, you don't have a plan to stop a runaway train if it occurs. Chair Powell, you are gambling with people's lives, and there's a pile of data showing that price gouging and supply chain kinks and the war in Ukraine are driving up prices. You cling to the idea that there's only one solution: lay off millions of workers. We need a Fed that will fight for families, and if you're not going to lead that charge, we need someone at the Fed who will.
Fuck?
Senator Vance of Ohio.
Thank you, Mr. Chairman. Chairman Powell, thanks so much for being here.
My boy Powell's sitting there like, is this not y'all's job?
How often you get to talk to the Federal Reserve Chairman, so I might as well ask it. So to give some context here, my family comes from Appalachia.
My boy covers
Monetary
monetary policy.
in southeastern Kentucky, coal country, and then moved to southern Ohio, where I now have the honor of representing all of Ohio. And one of the things that you hear a lot.
Yeah, exactly,
Noxta,
Noxta, exactly.
The history of Appalachia is.
God, what is this lady on the left leaning in? She kind of scared me at first.
Resource curse, right? So there's a lot of coal in central Appalachia. That enables a certain amount of consumption. Obviously, consumption is good. People need food and medicine and other things. But there's also a pretty good argument that for a host of reasons, it causes malinvestment in the region, and consequently, you have lower productivity growth, lower innovation, and an economy that's much less diversified and much less dynamic. I'm wondering, when I hear about the history, when I think about and read about the history of Appalachia and the resource curse, I'm struck by some of by the idea that you could make a similar argument about the reserve currency status of the United States dollar. Americans have enjoyed one of the greatest privileges of the internet.
All right, that lady's scaring me too much. We'll come back here in a couple minutes. I had to see that battle, though. That was awesome. It's always nice to see Elizabeth Warren go at it with somebody who's actually knowledgeable in their field. It's always really fun. I'm not even a big Democrat or Republican. I'm not really either. So I love to clown on both sides, really. They both have their fair share of clowns, as well as very intelligent people on both sides of the spectrum. But she is not one of them. She is one of the clowns. That shit is hilarious. She loves to always, like, ramp up her arguments with, like, in a room full of people who are not talking about that. Like, we could be talking about aliens right now, and she'd bring that up still. It's like, what? That shit's so funny, though. I do like her energy, though. You gotta give her that. She's definitely passionate. I just don't know if it's in the right direction. That shit's funny, though. Oh, I'll put the Asian music back on. I'm sorry. She loves to duke him out with her preset narrative. Yeah, literally. It's like, we're not talking about that today, Elizabeth. We're talking about something else. She's not wrong. She's just not in the right room. What? Somebody tweeted saying, I'd pay to watch a Jerome Powell versus Elizabeth Warren boxing match. Yeah. That'd be bad.
There isn't any obvious candidate to replace the United States right now where you can have free flow of capital in and out of the country, where you can really trust the rule of law and democratic institutions, and keeping keeping price stability, which you can here.
Do you think it gives us less control over our own currency, the fact that it's become the world's reserve currency?
Control over our currency. I'm not sure. So essentially, what we try to control is price stability, and no, it doesn't make it harder for us to keep inflation under control. The United States has a smaller external sector than most large economies, where it's only about 15%. So mainly, what affects inflation in the United States is domestic supply and demand.
Do you think it makes it harder for us to and to fight back against currency manipulation, to control the export and import flows in a way that stabilizes our own manufacturing sector?
Well, I mean, what's important there is really the level of the
He's
dollar.
like, hold up, I don't know if I want to answer questions about manipulating currency.
Our wares are more expensive abroad and that kind of thing. But we don't have an opinion on matters of the level of the dollar really matters for the Treasury Department and the elected government, not for the Fed.
Thank you, Chairman Bell.
Thank you, Senator Vance. Senator Van Hollen of Maryland's recognized.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here and for your service. I know the Fed is experiencing lots of challenges these days. I've got a couple questions that are just, I think, basic yes or no's, and then some longer questions. Would you agree that changes in the size of corporate profits can be one of the factors that affects the inflation rate?
Yes.
Now, recently, we saw that the Employment Cost Index, which, as you know, measures the growth of wages and benefit costs, grew at roughly 4% on an annualized basis in the fourth quarter of 2022. Is that right?
That's my recollection, yes.
So if corporate profits were to decline from the extremely high levels that we saw recently, would it be possible to sustain the 4% growth rate in the Employment Cost Index for an extended period of time, even as we get inflation down to the target of 2%?
Depends on what you mean by extended period of time. So you would not, without a very, very large increase in productivity, which would be great, but that we don't expect, you wouldn't be able to sustain 4% wage inflation over the longer term. Over the shorter term, though, yes.
So over the shorter term, that would not.
Little update, as I stated, with this meeting and all the questions coming back, we probably are going to get a lot of back and forth. We got a pretty good push. We got a pretty good pullback. Now we're just making new lows, but at a very slow pace as we go into lunch hours as well. So I would expect volume to continue to drop off as we kind of maintain inside of this area here. But overall, trade very, very light. Do not go into the rest of this day going crazy. Bigger time frame TA. We have gotten to another important spot. We're pretty much back where price needed to retest at least. So we could get some really good bounces off 400 pretty much the rest of the day to keep us in a smaller range. And then tomorrow they continue the rapid price action where we get a jump in one direction, they keep us down or they keep us up, whatever it is, regardless of what comes out tomorrow, of course. But overall, we are testing a very important area at 400. If this breaks, we can look for this gap fill that's at like 399.60, I think it is flat. If that ends up breaking, we can look for that gap fill. If we end up getting some good bounces, we can look over 402 for bigger strength in those pushes. But for now, in the smaller time frame, we have made that very nasty drop. We had our pullback to 403 that we talked about together. We had the retracement back down to the 100% move again. So we're pretty much just fighting 400 right now until we get our next decision. So just wanted to point that out so you guys see the basics of it.
Without violating the 2% inflation, isn't that right?
Yes, I mean, when I hear profit margins, what we're seeing in the economy is pretty much about shortages and supply chain blockages. And when there's not enough of a product, what happens, and there's a lot of demand, what you see is prices going up as the supply chains get fixed and shortages are alleviated. You will see inflation coming down, you'll see margins coming down, and that will certainly help with inflation.
Right, but profits are the margin, right? They're going up beyond what they were before. That means that even with the increase of costs because of supply chains, they're making more profits. Which again, that they can do that. But my point is that as a contributor to inflation, as you indicated in response to the first question, let me ask you about the tight labor market because one of the issues in a tight labor market.
Apple has a higher low at 152s. Amazon holding up really well at a higher low at 93.20. They're now above 93.75. Tesla squeezing higher low and lower highs. Microsoft squeezing super hard. A lot of volume just sitting in one spot. Their next breakout will be above 257s or below 254s. Just getting these screenshots for chat real quick.
And a significant part of that has been immigration. So, and that has moved up participation by a little bit, but it may be part of why we're hearing. It may be part of why we're hearing from in the labor market that the really intense labor shortage pressures that we were hearing about in 2021 and 22 may be alleviating. So that would contribute to that. Clearly, more people. Clearly, the economy is calling for more people with essentially two job openings for every unemployed person. And this can be a source of those people.
Right, and that would reduce the tightness of the labor market and reduce pressures on inflation, right?
May already be doing so.
Thank you.
Senator Kramer of North Dakota is recognized.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here. And I can't resist responding to a few things that my friends on the left have said. For example, in his opening statement, Chairman Brown had a long list of things that raising interest rates won't do. raising interest rates won't fill in the blank. I'm going to fill in the blank with a couple things. How about raising interest rates won't stop Senate Democrats and President Biden from overtaxing, overspending, overborrowing, overregulating? Chairman Brown said we should rebuild our supply chain by curbing offshoring, corporate offshoring. I agree. He talked a lot about corporate greed contributing to inflation. Okay. But how about regulatory greed contributing to corporate greed? How do you expect corporations to reinvest money if you overregulate their ability to invest that money right here in the United States of America? You want to onshore some things? How about energy policy? How about instead of looking to Venezuela or Iran for oil supply, or Russia, or rather than looking to China for electric vehicles and chips and solar panels, how about we have a strategy that onshores those things by reducing regulation, reducing taxes, letting those corporations reinvest their profits rather than stock buybacks or dividends. This idea that somehow the Federal Reserve is supposed to keep inflation in check. Well,
I don't care.
The stock buybacks.
Yeah, I like how username said this. He said, "Spy, not a very enthusiastic buyer reaction off of 400 so far." That is exactly how I would put that. We just have a test of 400, not really any kind of crazy buying off of it, just a little reaction. I'm honestly impressed you guys that this many of you guys are still in here. We've had most of you in here for majority of the stream, even with all that I'm not going to say exciting or boring, but it wasn't as exciting information being given. So I'm very impressed with all of you guys. Seriously, pat yourself on the back if you're still here pushing through. I honestly am very impressed. I was thinking I'd look back over at the view counter and it'd be like 100 flat, which I wouldn't blame y'all. Nothing super exciting coming out. Pretty much like I said, though, again, I would seriously take what I say, and I'm not trying to sit here and say I'm the all-knowing, but guys, I've had pretty good, clear direction and sense on a lot of this stuff for the past few months now, so I'd pay very close attention when I cover these scenarios and what's coming out. Pretty much all that came out today was him just recovering information and being questioned again. This is very normal. It's nothing out of the norm. We're just not getting anything new, so there's nothing enthusiastic about, not getting any new news yet, and us not moving to the upside. So that's why we're just kind of, if anything, we only moved down just because of buy the rumor, sell the news type move. Now we're just kind of getting our footing before tomorrow, and we do still have plenty of information for the rest of the week, but we also have CPI coming out the next week. After that, we have the Fed meeting, so there's still a lot of stuff coming out that we don't know. I'd say next week and the week after are even more important than this week. And I'd say the first week of this month was really the only calm week you're going to get, which you guys saw how calm that was. It really wasn't calm. It was more of the market not listening to the news coming out. So now what we're going to see is probably a little bit more downside action over the next couple weeks. As we get into these bigger news catalysts, and if nothing new comes out, or let's say they say pause or the quarter point hike comes out, we probably will get a little bit of a pump. Nothing too crazy, but that'll put us back in more enthusiastic vibes of the market. If they just come back out and they say, oh, well, we'll probably keep the door open on a 50-point hike for the next meeting, then we'll probably be in the same situation we're in right now. So I would really say everything really comes down to just waiting for the next Fed meeting. I don't even think the next CPI report will change anything that they're going to do. I think they are already set in stone saying we're definitely doing 25 points. Now, if CPI data came out and it was just so far out of this realm that they couldn't even think about it, then yeah, we probably will see that half-point hike. I keep saying quarter. That half-point hike, which will be a lot more aggressive, and that will probably bring the market down, bringing a shock to the market. So that's one thing to look out for. Bueller talks, we listen. Small percentage put on meta, late entry as usual. Literally done my most consistent trading since I found your morning streams. I appreciate that, Andrew. I'm very happy to hear that from you. I had to give y'all a a little bit of a shout out though, because I know it's not exciting to just sit here and stare at this stuff or to listen to the Fed and all that stuff over and over, but we're really just trying to track the story of what they're going on with, So I'd say today everything you heard was just routine. There was nothing new that came out about today. I would say at first the way it was reported, it made it look a lot worse, but I would say nothing new was reported today. It's really just routine, which Powell is probably be on board with doing, but so let's see what kind of news we get out of tomorrow's meeting, conference, whatever you want to call it. So I'll be sure to pull that stream up again tomorrow for a few bits here and there, kind of like we did today, just so all you guys are on the same page as me and we'll all understand what's coming out. But I think I am going to end the stream there. That meeting's about to end. Tomorrow we'll stream that one. We'll go over that as well. What else is coming out? Is there anything new that came out? We'll cover all that good stuff. But for now, I am going to say peace out. Hope you guys have a great rest of your day. Please go enjoy it. Don't just sit here and stare at your charts. Be sure to clean up your charts going into tomorrow, though. Therefore, everything's cleaned up. Well, I'll see you guys later on. Feel free to join the Discord if you want to catch more updates, more engagement, more interaction with the community. I'll see you guys later on. Link is in the bio.